Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago, and joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley, and from Madison, Wisconsin, returning to the Grain Feed Dairy Market Advising Director, Miss Katie Burgess. Team, how are we today?
Pretty good, Jim. Pretty good.
Excellent. Good to hear, Jake. Katie, how are you in Wisconsin?
Doing good. It's hot here in the Midwest, so
Yeah, it's getting a little toasty again. It's late July, so anyone that wants to call or write in, which people do every week, and say, hey, guys, it's late July. We know, we get it, but it's pretty stinking toasty.
I think it's supposed to be hotter in the Midwest today than it is in California, which is pretty unusual for this time of year. So
I would say so. I think we're going to get some heat index of triple digits here over the next couple days. So we got to brace ourselves, and so do those cows. It could be a tough couple days here.
that's right.
So we got to keep an eye on that. And you know what? Speaking of those cows, we got a little milk production report that we're going to chat through with Miss Katie Burgess here momentarily. Paige, if we could kindly timestamp the broadcast, it is Wednesday afternoon. It's about 3:20 here, Chicago time. And at least on the grain and feed side of things, we tried to mostly close in the red today, so slightly lower again. And it's been that kind of week. We had a little bit of a recovery week last week. This week is back in the red a bit. So for those feeding these products to our animals, mostly a good thing here, as December corn closed down a half cent at 417.5. We had Novi beans down 2 3/4 at 1022 3/4. And December meal, that stubborn little byproduct, was down 120 at 285.60. And just because we like to talk about it every once in a while, we'll say diesel oil was up 47 points at 55.86. But also, Jake, I think we might touch on the soybean crush market in a bit. So good to focus on each of those little byproducts. But first, Katie Burgess, we referenced those cows maybe having a next tough couple days here in the Midwest. But in terms of milk production, overall, we had a juicy report come out yesterday afternoon, and I think there was some pretty big production numbers there for our animals. So, Katie, what happened in that report yesterday?
That's for sure. It had gotten a little hot in the Midwest at the end of June, but it wasn't enough to weigh on the numbers. And in fact, USDA reported June milk production up 3.3%. That is the biggest year-over-year growth we've seen dating back to 2021, well above industry expectations. And I'll say a part of that was USDA also revised the May data higher and added 20,000 cows to the herd in May. So we had more cow power going into June than we previously thought, which helps supercharge that number well above all industry expectations. I want to call it a couple things. I mentioned cow numbers were revised higher. We added more cows again in June too. So when we look at the dairy herd right now, also the highest it's been since 2021. And to me, the more remarkable thing is outside of a 5-month stretch in 2021, other than that, it's the highest dairy herd size we've had dating back to the mid-1990s. So we have a lot of cows out there. We've added more than 100,000 head in just the past 6 months. So we've really seen some impressive growth in the herd, which helped supercharge that milk production number for June at plus 3.3%.
Yeah, so some really big figures there that you just mentioned, Katie. And also, I love the phrase cow power. So I just want to make sure that we keep that one in our back pocket as well. So which states demonstrated some of the best cow power here on yesterday's report? Because there were some unique regional trends, I think, in terms of where we saw some growth. Can you elaborate on that, please?
That's for sure. On a percentage basis, Jake, it was done by you. Kansas, milk production up 19% year over year. Kind of expected. We've got some new processing capacity in Kansas, so we're seeing more cows added there. A few of the other normal players, Texas, South Dakota, Idaho, all up around 10% year over year. So following the trends we've seen. Also, I want to call out, we've seen some cows moving in the Pacific Northwest that if you look at Washington data, they've been down in cows the past 2 months, and Idaho's been up by a similar number of cows over the past 2 months. So it feels like we're seeing some cows transfer in the Pacific Northwest. And the other part that really helped yesterday's report is that California was finally back in positive territory after 8 consecutive months of declines due to avian influenza. It seems like they finally put that behind them. It helped their number turn positive. They did have an easy year-over-year comparison. Plus, to me, the most remarkable thing about California is normally it gets hot in California in the summer. So normally June milk production is down 3% compared to May milk production on a per cow basis. This year, it was only down 0.5%. So we didn't get that normal summer seasonal decline like we'd expect out of California. Instead, the cows held on pretty well. And, we talked about it at the top of the show. California in July is only 80 degrees this week. So it feels like California could have some more big numbers in the month ahead.
Okay, very interesting to see. And then, Katie, I think, let's say we approach this in a vacuum here, all things unchanged, you suddenly get I say, sizable shift in the supply side in terms of market data. So all else unchanged, how did we then see markets react after this report?
Yeah, futures markets were hit pretty hard today following the report yesterday afternoon. And some of it, like the class 3 side was down. A lot of that makes sense because we've got a lot of new milk and cheese processing capacity. Butter and powder futures also hit today, though, as well. I think that's a lot about California looking a little bit better than they had been. So all in all, the markets went from the past few months, the milk production reports were actually coming in a little under expectations. And now all of a sudden we went way over and the markets reacted in kind. I think buyers took a step back and said, looks like we'll have plenty of product in the second half, so I'll move my bids a little bit lower.
Okay, well, that's certainly going to be interesting to watch because then I believe there is a demand element to this formula. And perhaps is it Friday that we get a report on the demand side of things?
That's right. We'll get the cold storage report on Friday afternoon after the markets close. So we'll need to wait till Monday to see the market impacts. So watching to see what happens with inventories. Globally, U.S. prices for cheese and butter are still the lowest in the world. So looking forward to the export data in a couple weeks as well. But I'll just say what we hear about domestic demand for dairy products is still pretty ho-hum. Nothing too exciting on the domestic demand front. So really keeping a close eye on those export markets to see sources of growth and demand.
Okay, so it's potentially some light here from the export side, but let's say it's July 23rd, right, Katie? I know my kids will be back in school here probably in the next 4 weeks. Don't pin me on that date, but I believe it's around the next 4 weeks or so. Most then kids in the U.S., it's going to be between that time and let's say maybe right after Labor Day. Are we seeing a seasonal pickup at some point here as kids are back in the classroom, in those cafeterias? And then is it too early to talk about the holiday demand too? Am I way off on that one as well?
No, I mean, I think you're spot on that. As we talk to fluid bottlers, especially with some of the schools in the Southeast that start a bit earlier, they're talking about starting to bottle some fluid milk for schools, perhaps next week. So we'll see that demand pick up. And I do think, especially with the lower prices we've got on the futures board today, people are probably taking a closer look at their holiday demand plans, seeing where the prices out there make sense. Because, yeah, it's crazy to think that in 6 weeks we'll be past Labor Day. And historically, like if butter is going to make a high, it can make it at late September. Cheese is kind of the same September, October for seasonal demand. So it's coming up fast.
It is. It's coming up fast. It's pretty wild. We still want to soak up some summer here. So we're still going to enjoy what we have. But yeah, this is going to be around the corner here pretty quick. Kids back in school and then really talking about some of that holiday demand here. It's pretty wild to think about in late July. But I guess, Jake, let's turn it over to you because you've been keeping up with some demand on your own. You've been going to Chick-fil-A. We talked about those cow numbers in Kansas. I know some of those are the cows that paint the Chick-fil-A billboards, right, to eat more chicken. So maybe that's also partially driving this. But Jake, let's just focus on the feed markets, if you don't mind, and talk about what we've been seeing there. We talked with Verl last week in our post-WASDE episode and really kind of hammered what this corn market might look like in the coming weeks. But I think, Jake, you've also been seeing some really interesting numbers on the basis side of this market in your neck of the woods and further south as well. So would you mind touching on those figures a little bit?
Yeah, I think on the corn side, we've been talking about new crop basis values potentially weakening, at least returning to some of the low numbers that we saw last year, if not improving on those. And in a lot of the Midwest, values are still a little bit elevated. And then there's additional risk premium in the rail dependent markets to the west and the south and southeast until we get more corn sold from the farm and starting to fill up this pipeline. And right now, futures aren't doing a whole heck of a lot of work to incentivize folks to do much of that selling. But we're not seeing terrible basis numbers right now either, to where if we did see futures just fall apart to get to $4 or better, you could step in and start to do a little bit of ownership without feeling too bad about it. There are some indications out there, especially in some of the more efficient shuttle lines, that we could start to feel some pressure on basis here in the near future. There's just a big crop in the Midwest. We continue to see conditions ratings each Monday be above the 5-year average and actually above the 5-year range, which has a lot of folks talking about potential increase in yield, maybe as soon as this next WASDE here in just a few weeks. But everything's looking pretty good across the I-states where we're going to source a lot of this rail corn from. And so continuing to be patient on that front. We're actually seeing a little bit of a softer tone yet again in the protein market here. I think some of the information from the 45Z tax code that went through a couple weeks ago and the subsidies and incentives that come along with that are starting to really be penciled out at these crush facilities, and they're able to get a hold of some beans for the new crop year and start to be a little more confident in their pipeline going forward. And so having confirmed those 45Z tax credits really bolstered crush margins, both in the cash and board crush sense, to allow for soybean meal basis certainly to come under some pressure. I think canola has kind of stalled out a little bit with reignited rhetoric around tariffs between the US and Canada and how that may shape up. But all in all, still trending favorably for feed buyers here on the cash front. I think one thing we are watching here in the short term for protein markets is we are starting to catch some conversations around the seasonal shutdowns for repairs and maintenance at a lot of these crush facilities around the country. You know, typically it's a week or two or maybe a little longer than that. And these first handful, it's maybe a little bit surprising that they're going to be 2 or 3 weeks of shutdown time for repairs and maintenance. Given the crush margins that are out there, you would think they'd try to keep those about as short as they can. But folks may be just really wanting to do a good job here early so they can capture as much as possible when the glut of beans come across the scale at harvest. So if you're still exposed and needing to get physical product bought for your needs between now and harvest time, say late September, early October, it's probably worth going ahead and taking advantage of this really attractive futures price and basis values to just avoid what can sometimes lead to logistical snafus as plants kind of cycle through their shutdowns. So that's one thing we're working on here this week. I think we're also starting to see, of course, we've got this August 1st tariff deadline looming. We got an announcement this morning that the US and Japan had come to an agreement at a 15% tariff on goods coming into the US from Japan. That was down from what I think was initially expected to be 30%. There's some other Southeast Asian countries now starting to line up and try to get something inked as well, hearing that the EU may be close to getting something done. So if nothing else, take some uncertainty and some volatility premium out of the market. They maybe don't fundamentally change how grain moves or where it goes, but they certainly take some of that risk premium out of the market. We'll have to wait until we get more finite data on what was agreed upon to decide just how much of a move that may make as far as additional or fewer exports.
Okay. Yeah, I think that's going to be an interesting one, Jake, because as we all know very well, right, the tariff situation is a fluid situation. It moves a lot since the beginning of this year, and it has had a serious impact on our grain market. So maybe it should be encouraging to see some deals being solidified, especially with those that are key buyers of our U.S. corn. Like you said, Japan having that settled for now. I think they might be our number 2 corn buyer in the globe at this point. And to see things maybe okay there, it should at least give a little consistency in what we expect out of corn. Hopefully, maybe the same gets settled with the EU as you suggested, and then other nations as we move forward. So we'll see. I think what you said about the crush side of things remains important as well, because we've been talking a lot about the protein futures market potentially bottoming near term at 280 for December meal. And so far, that has proven to be the case. And we focused on that number because just that December contract over the last 10 years or so, 280 is pretty much that threshold. And when we break it, we see some good buying. We've seen that so far. We've managed to trade under it for a day or so, but largely it has held the low. So if this maintenance that you were suggesting could potentially slow things up a little bit, you might see some support in futures as well. So always very interesting to pay close attention to these markets. There's a lot going on, so everybody stay cool out there. Katie, thank you very much for returning to the show. Always a pleasure to have you.
Thanks for having me today, Jim.
We'd also like to thank the Everag Insights crew for their support. Big thanks to Paige for production magic, and thank you to the viewers for watching. The Grain Feed contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.